Hey guys, so today was a brutally weird day. So we came out this morning, we had a little bit of green there pre-market. And again, just kind of like yesterday, we looked so bearish at open, and this has been kind of happening now for a couple days here where we just look so bearish at open, and we start to break through critical support levels and sell out, hit some signals that you should see some downside continuation. But yet again, we get this weird rally into about midday, about that 1 to 1:30 time frame, and then markets just kind of give it all back up. So today was an extra spicy weird day because we had basically a $3.50 drop over about an hour. Then we rallied $2.50 over 30 minutes, dropped another basically $3 to end the day over 30 minutes. So just a ton of volatility today. I got caught off guard a couple times. Got burnt with some full stop losses today. Just a tough day of trading. I'm not going to let it affect me though. Again, I mean, this has been a tough month of trading, and looking at my strategy back tested just results wise so far this month, the basic strategy, this would actually be the first red month of trading for this strategy in about 5 months. If we use the new updated trend version of this strategy, it is green, but it's a very small green this month. So this has been a very, very, very tough month of trading. If you look at all the wicks, that pretty much explains it. We are just seeing tons of misdirection, tons of things just not following through, and just moves that from a technical standpoint just doesn't make sense really. So again, it is what it is. It's part of trading. I do think there is a bigger I think there's a bigger thing going on. I think that markets are far more bearish than is being led on right now. I personally feel that the market is purposely holding the VIX down. I mean, if you look at the VIX today, we dumped hard into open till 1 o'clock. From 1 o'clock until 2 o'clock, it went on a massive move from basically low a day to high a day. And then from 1 o'clock to 3:30, it goes all the way back to almost low a day, only to make a brand new high a day before end of day. It's just being thrown all over the place. And my really only explanation is that, again, markets are far more bearish and have far more aggressive selling going on than is being let actually happen. I think that the market is slightly being held up by the VIX, and the VIX is controlling the selling, and they're doing it in a way to control a full-on capitulation. I think if they let this market really go, we would have some straight up -2 to -3% days if they let the VIX really just run. But again, I truly believe that they're slow burning this to the downside to prevent basically capitulation at this point. So taking a look at the daily here. So what we have is we have back-to-back closes under the 100 EMA. We have not had back-to-back closes under the 100 EMA since March. From here, you can see we are in our bigger red bear channel. We closed a new low down here. The 8 and 20 are crossing under the 50 EMA. That's very bearish. If we get that 8 under the 100, which probably is going to happen early next week, that's extremely bearish too. From here, our big target realistically is the 200 EMA right down there at 425.5. It is notable we are coming into a stronger demand and supply area. This 426.6 to really 431.3 area. This is a pretty strong area. If you go back to, this is back in early June here, when we finally broke through, you can see how long we spent in this area before we finally pushed through. So this is going to be a big support area to hold. However, if we hold it, as you can see, there's a good amount of downside to be had. If we go over to the weekly here, so from a weekly standpoint, we did put that new supply in last week. We have officially broken our one of our recovery lines here. This one goes from March to August here. So we still have, and I'm not sure why my line is messed up here, but let me get that fixed for us here. We still have our overall bear or bull channel rather that we are holding inside of for over a year now. So you can see I got that set up better here for us now. And we'll put that one inside of it too. There we go. So again, this goes back to October lows and March lows. So that gives us downside potential to about 422.36. It's about an $8 move down to still be holding inside of an overall bull channel. But our bull channel that we've been in for basically 9 months, that dates back to March, we officially are out of that. We broke through that. So you can see we are now starting a new bear channel down. So our resistance is all the way up here at 449, and then our support for that bull channel, or bear channel rather, is at 426. We did come low enough, just barely, to tag 430.1. We did, for 1 penny, see the 420s for the first time since back here in beginning of June. I do expect downside continuation. I'm looking for maybe the weekly 50 EMA, but basically our next two major supports is 427.1 and 415.8. Now going over to futures here, same thing. We back tested and rejected the 100 EMA. This sort of rejection off this should push us lower. This should bring us down into this area down here. Realistically, our next big target for futures is the 200 EMA, and then we have a double supply down here at 42.93 and 42.99. We are now closed back to back under this triple demand support area. So we have lost this range, which should bring us down into this next range down here. Now going over to the weekly here, same thing. We are still in our more short-term up channel here. We did get a new weekly supply at 45.15, and we closed under 43.79 day or weekly demand, and the weekly 20 EMA here. So our next major support really is down here at 42.88, and then it's a bigger drop to 41.90. So that's pretty much what I'm targeting now, is a bigger drop and a bigger sell-off. I do think that much more bearishness is going to come into this market. We could get a bit of a rest week next week, but I'm pretty bearish going into the end of the year at this point. Going over to the Qs here, we are looking a little more strong on the Qs. So the one thing about the Qs is that we did break through, and I told you this, guys, yesterday, that we broke through our year-long bull channel. So that honestly tells me that most likely SPY will do the same thing. So we did break that. So again, now we're just in this down channel here. We have not closed a new low yet. So we did actually retake the 100 EMA support here and close back in our double demand area here. Again, my target really is 347.5, and then this 200 EMA down here at 342 area. From a weekly standpoint here, the Qs did get a new weekly supply, and again, we closed below our 359.27 demand on the weekly and below the 20 EMA. My next major target that we have is down here at 330.16. So again, that's a massive drop. I don't expect us to hit that next week, obviously. But I am looking for continuation to the downside. I'm looking for a move probably down to this 340, 350 area. So again, the VIX has just been all over the place. So I said that the 17.2 to 17.91 area was a major resistance, a major level to watch. So what's also interesting today is the VIX closed down 2%, yet SPY closed red today. And there was a while there where the VIX was down almost 4 to 5%, yet SPY was red. And that's very, very odd. And that plays more into my whole suppression narrative, that they're suppressing the VIX to therefore keep the market from dropping more than it is. We did hold the 15-minute, daily AEMA here. So this massive wick right here, this looks like some continuation is going to come. I would again not be surprised to see the VIX break through 18 next week and start targeting the 19.56 area. overall, going into next week, from a daily standpoint, we are entering extreme bear momentum, which obviously gives us a decent amount of downside or upside potential. So being or downside potential, sorry. So that extreme momentum can push us through being completely oversold, which we are on the daily right now. The weekly, though, it's still a DMI wave down. We have not hit extreme bear momentum yet, but momentum is clearly to the downside. So overall, I would not be surprised to see an early week bounce, but I think by end of week, we will close much lower. Realistically, by end of week, I would not be surprised to see us under 4,300 for sure. I think we could easily hit the 4250 to 4280 area. On SPY, I think that somewhere from 420 to 425 is a pretty strong potential for us to hit that area. So, all right, guys, I will see you guys next week.